Yo, 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 what's up, YouTube fam? It's your boy Stevenson, Lindor, Wall Street family here, where we motivate, elevate, and make money daily. All right, before we get into it, make sure you subscribe, make sure you share this, like, comment, pass this along to your friends and family, because today I'm going to be talking about the famous moving average indicator. All right, now the moving average indicator is probably one of the most popular indicators in all of trading, right? It literally smooths out price and filters out the noise from random short-term price fluctuations jumping up and down, right? Moving averages can be used in several different ways just by employing different numbers. So for example, once again, I'm on TradingView. I'm going to go to indicators and strategies. I'm going to type up moving average. I'm going to click on one, and then boom, as you can see here from the settings. So the input, the length, that number 9, that represents how many days, right? That moving average represents. So that means this moving average is calculating the last 9 trading days, and you can adjust it accordingly how you want, right? There's a number of different lengths that people use, right? You got people who use the 50, the 100, the 200, so on and so forth. And we're gonna get into all of that. And it's really easy and simple to use, guys. All right. So once you place your moving average there, basically when price tends to stay above the moving average, you're looking to buy. When price closes and stays below the moving average, you're looking to sell. All right. That's pretty much it. All right. But like I always said, when it comes to utilizing indicators tools, based on the information that you know and how you implement it, is going to decide whether or not this is going to be a powerful tool to you, right? Now, I know a lot of people who utilizes moving averages to great success, and then I know a lot of people who don't. All right. It's all on how you implement it. All right. Like I always say, a sword is only as strong as its master. So any tool that you use, it's only as strong to you based on the information that you know. So let's hop to it. All right. So again, gave you a quick breakdown of how the moving average is employed. Once price is above it, you're looking to buy. Once price below it, you're looking to sell. Now, it sounds as simple as that, but unfortunately, it's not that easy. All right. Because when I got introduced to this indicator, I thought, oh, okay. So I just buy whenever price is above it. I just sell whenever price is below it. And I found out the hard way, that's not how you utilize this indicator, right? As always, you got to have a strategy incorporated with it. Any indicator that you use, guys, I will say this on any video. Any indicator that you use, you must have a strategy for it. If you don't have a strategy for it, it is not going to be useful. All right. So when I'm using the moving average, all right, I want to use it in conjunction with my strategy. All right. So for example, if I'm looking for a buy, right? Number one, I want to make sure I'm actually in an uptrend. So for example, I'm going to identify this uptrend, right? Perfect. Boom. I went to the 4-hour. Now remember, whenever you're analyzing the markets, always pick a higher time frame. A higher time frame is technically 4 hours and higher, right? That's a strong time frame. So I like that time frame. 4-hour, I want to identify the trend. Now when I jump down to the 1 hour, the smaller time frames that I'll use for my entry, basically what I'm doing is I'm looking for price to pretty much not only be above the moving average, but as always, I want to make sure, right, that price doesn't break my previous low, right? So the retest strategy. So for example, see, this uptrend started all the way at the bottom here. Notice when price went above it. Now, I don't want to start buying the moment price goes above it, all right? I want to let this move happen. What I'm waiting for is price to actually come back down under it. And I want to see if my previous low, right, at the time when price made that initial crossover to the upside, when it comes back down, Is it breaking the previous low? If not, then once price crosses back over, I'll be looking for my buy because I know, hey, this is my previous low. So this is where I'm actually going to have my stop loss, right? So now, boom, once price goes over and comes back to retest and I see that this previous low is not taken out, now I can comfortably buy. As you can see here, now price fluctuates a lot, especially with moving average. All right, so you want to be careful. And I'm going to show you how you can use multiple moving averages to really maximize and have a greater understanding of what price is really trying to do. All right, so notice price came back up, then went back down. So you would have been in a little bit of drawdown, but the main thing, price did not break this low. And then as you can see, you have a nice move to the upside. All right. So when price comes back down again under, as you can see here, I can now take another buy because you know why? It did not break the previous low. So I'm always, every time price pulls back, I'm always looking at previous structure and I see, oh, price is not breaking. So once price closes above the moving average, I can look to buy again. And then I'll ride that out. And I can keep doing this, right? And I know people who literally just trade like this and make money all day, every day. Now, another way you can utilize the moving average, which is what a lot of people do, is they like to incorporate multiple moving averages. And then most importantly, they like to raise the amount of days, right? Increase the length on the MAs. All right. So what I'm going to do is I'm going to add an additional moving average here. Right. I'm going to add an additional moving average. And if you notice, you have multiple different moving average. Like I always say, all these indicators, they all work the same. All right. But keep in mind, it's how you use it. Now, if you notice, you got a regular moving average, you got the moving average exponential, you got the smooth moving averages, right? So basically, the difference between all of them is one moves a little bit faster than the other, one moves a little bit slower than the other. At the end of the day, they all do the same thing. It's all a matter of preference, right? So I'm going to just use the same thing again. I'm going to have two. The difference is what I'm going to do here is, right? One, I'm going to change from 90 to, let's say, 50, right? And then I'm going to change the color. Put it like red. Boom. So I'm going to put two moving averages here. So now I have the 9 EMA, and then I have the 50. All right. So basically, notice this protects me because the smaller moving average, which is the 9, right? It's more closer to price. All right. Now, like I always tell people, remember, all indicators lag. So by the time they tell you to buy or sell, you're kind of late to the party. This is why people who are relying on indicators, a lot of times they lose because you're really missing the move. Like right here, for example, see how this is telling you to go on this uptrend here? If I play the replay button, by the time this truly crossed over, look at where you're getting into the market. See that? By the time this cross, you're really entering the market around this area. Don't look at this and think, oh, it crossed here, so I'll be entering here. You're more likely to enter around this candlestick right here, unless you jump down to a smaller time frame where you can catch the entry a lot earlier. But this is how you can use the double moving average and have great success to it, right? So this is what I like to do. So again, we're going to identify that same trend, right? I'm going to make this a simple, easy video. I don't want to lose you guys here, right? So the 9 EMA, which is the blue line, right? That's more closer to price. That's following price real closely. The 50 EMA, right, is basically factoring the overall trend. So the overall trend right now is an uptrend. As you guys can see, price is above it. So you're in this uptrend, right? And every time the blue crosses above the moving average, right? The smaller one crosses above the bigger one. That's called the golden cross. When it closes below it right here, so when it is above it right here, this is called the golden cross, uptrend. When it crosses below it, this is called the death cross. All right. So since we're in this uptrend, so once again, I'd identify the trend on a higher time frame, go to a smaller one, and this is exactly what I'm looking for. Again, I'm looking for price to cross up. Now, what I want to see is price to pull back. Price to pull back, all right? And I want to confirm that price is not going to break. So this is going to give you added confirmation. So instead of just jumping in prematurely, what I want to see is I want to see the blue line cross above the red moving average. So when it crosses above there, now I know for a fact I can comfortably buy here. So when it came back and retested and I see, okay, price is not breaking this low, to confirm that this uptrend is going to go up, I want to see that blue cross. I want to see that golden cross above the big moving average, and then I can buy. And I will do the same thing over again. So now I would wait. So throughout this entire time, you see how the blue is above the orange, above the red? So this is a buy the whole time, right? So when I would let it pull back again, boom, see here? Now, most people will try to prematurely jump in too soon. No, let it pull back. You'll know when to jump in again because number one, as you can see here, as it's pulling back, it's not breaking the previous structure, which is important. And then number two, all you have to do is wait for that cross now. See that? So yeah, you could have gotten right here, but your better confirmation is the golden cross. So you would have been buying right here, right? And then look, if I would have bought right here, stop loss below, and then as you can see, you got a nice move to the upside. Look at that. Boom, nice 122 pip move. And then you do it again. Let it pull back. You see it's not breaking the previous structure. And then let the line. I'm going to zoom in here. See, this is not a cross. See how when price came back above both here? No. Make sure the blue is crossing the red. Once it closes, make sure. So if I'm trading on the 1 hour, I need to see a 1 hour close above here. I would place my entry, stop loss below, and then as you can see, you had a nice move to the upside. All right, guys? And this is how you can effectively use the moving average. All right, guys? And then if you put it in conjunction with other indicators that you might be using, let's say a MACD, an RSI, or whatever the case may be, you'll see you will strengthen your analysis on why you should be buying or selling that setup. All right, guys? So I just wanted to shoot this quick video breaking down exactly how the moving average works, how I incorporate it in my trading, and how you can do the exact same thing. Hopefully this helped. Please leave a comment below, like, share, definitely subscribe to this channel. Once again, it's the Wall Street family. If you have any questions, concern, please contact me on any social media platform. Send me an email. If you want to join the family, definitely hit me up. Wall Street family, where we motivate, elevate, and make money daily. We out.